Hey, what's up, guys? Sam here, and I'll be doing the premium video for Friday, May 2nd, 2025. All right, so we got about 2 hours to go before the market closes here, but really the story of the week is going to be the weekly candle, so I don't think all that much is going to change here in the next 2 hours. So we can go ahead and dive in here and kind of get our bearings into next week. So let's start here where we usually start, which is going to be the SPY, and then we'll go through the indexes. We'll take a look around the market a little bit. We might even have some time to look at some sectors just to see how the sectors are shaping up here. But obviously, massive week here. Honestly, massive run here in the last couple of weeks. Right, the last 2 weeks here have had a huge run from about 514 to about 568 as we speak. That's a big one. And in doing so, you've neutralized a lot of the signals that took you lower. So, for example, this signal was active basically here, and that took you all the way down. And of course, now you have some bull judo to the upside. Bull judo is when you have a down signal followed immediately by an up signal that triggered somewhere in here. And then, of course, that takes you higher. What's really interesting here is the fact that there's so many different levels of resistance right around here. And the market is just trading like it has a tractor beam for 575, right? Last week we looked at the SPX and it has the same kind of target. I think it's right around 5750 on the SPX, if I remember correctly. And on SPY it would be right around 575. So definitely seems like it wants to at least retest this zone here. And I've been watching it from the inside out, you're looking at a 5-minute chart. And it is a market that is not to be messed with on a 5-minute chart. Very strong action on a 5-minute chart. And anytime that you have a 5-minute chart that behaves like this, where you'll have a low, right? You come down, you make a low, you bounce up, that becomes your reference point, right? That becomes your support. You go down, you break through it, you close below it, and then immediately it does that on a 5-minute chart, and it does that over and over and over again. You don't want to mess with that. That is something I call the hand of God, and you don't want to mess with that. That tells you that the market has its sights set on a goal, and it will get there. It will get there, is usually the case. So really strong action beyond just the obvious, weekly candles and whatnot. From a 5-minute perspective, ultra strong price action. Very difficult to want to do anything other than long, frankly, because every time that you break a 5-minute low, you end up getting kind of a immediate reversal. So as your trade, you want to ask yourself, who's getting hurt here, right? Who's getting hurt and who's not getting hurt. And right now, I would say that bulls are not getting hurt at all. Really, the only way you can get hurt as a bull in this market is if you take a stop, and that's extraordinarily strong. So maybe these are famous last words here as we enter kind of crunch zone next week, right? I only have one video with you a week, and it's the Friday video, so we won't speak again for another week or so. But the market definitely seems to have eyes on that zone right there, potentially going into Fed. I wouldn't be too surprised if on Fed day we were right there, and then Powell gives us the thumbs up or the thumbs down from there. So aside from that, if we look here on SPY, there's really not much to update other than the fact that the chart is completely neutralized. It went from being more bearish, and now it's just ever so slightly negative but neutral, which is a massive improvement. If we do the same thing here on the Qs, it's going to be an identical story, so we don't have to spend as much time on it. With the Qs here, you're already at the daily 200. Again, just phenomenal price action, just truly remarkable price action in terms of just the ability from the 5-minute time frame and lower to just drive through any breaks of support. So not to be messed with usually. Oftentimes this would be the spot where I'd be looking for a potential reversal signal, but you don't have that yet, right? So you do have a point of interest here, which is going to be the red line, which is where it failed from last time. However, last time it didn't have this upward momentum. Last time that it failed, it was falling and then it kicked back. This time it's already fallen and is stair-stepping up. So there is a little bit of a difference here in the test here versus the test here. In many cases, I would say that this is initially a point of interest that we should be looking for any type of reversal candles, but I do not have anything like that here at the moment. So the probability that this can just keep going, at least going into next week, without seeing any additional information, is actually still pretty high. And frankly, the way that the market's trading, it's trading like it wants a new all-time high. Forget the 200. It looks like it really does want a new all-time high the way that it's trading. So we'll see if that's in the cards. It wouldn't be unprecedented, but at least for now, the conversation should be 5750 SPY or 5750 SPX, and then we'll make the next determination from there. Let's go to HYG, which is just my proxy for interest rates and bonds and whatnot. And if you're bullish, you want to see this going up. And of course, you do have it going up, or at least steady. The chart here is not as good, but this just needs to be stable. It doesn't necessarily need to go up every day, but you do want to see it up on days like today. The chart here is a mess. I do have to admit that is a messy, ugly chart, but the overall structure of the chart is just neutral. So it doesn't look like it wants to spike higher, which would be very bullish, and it doesn't look like it wants to drill lower, which would be very bearish. So really, as long as this chart remains stable, then we can just revert back to what we just saw in the indexes and give the bulls the benefit of the doubt going into next week, because this doesn't necessarily change the story that we just looked at. So that's that one. Let's take a quick look at the dollar here. Probably won't have too much to say about the dollar. I don't really know how much it relates back to what we do with equities here at the moment. So again, just kind of a consolidation pattern here in the dollar. I think the dollar here and HYG are in some ways similar in that really as long as there's no surprise giant move up or down, I think we can just revert back to the original story from the indexes, which is a very bullish story for now. So I'm not seeing here anything in the dollar that would change my mind on that. Let's check out IWM, because sometimes IWM does look a little bit different than SPY or QQQ. And here in IWM, again, same story, just really, really impressive series of candles. Trading now above its weekly 200, which is pretty important. And aside from that, really the main story here on IWM is that it did finally get its up arrow this week. And it actually has an up arrow on the daily chart for the first time in a long time too. So basically all that does is just neutralize the chart. But you can't go bullish without going through neutral first. So let's do this. So for now, really the story, the reason that I look at HYG and dollar and with you guys is because I'm looking to see if it's going to change the story from the indexes. Sometimes the indexes will tell us one thing and then all of those important peripheral markets will tell us another. But in this case, the peripheral markets are not telling us a sufficiently different story to change the overall story. So if we look here at the sectors, massive improvements here. Last week when we looked at this was mostly red. This is still red here, like healthcare still, like I wouldn't touch healthcare. I don't have a ton of interest in XLY, although I do have a good amount of interest in Tesla next week. I think Tesla could really rip if it gets above 300. I don't have any interest in energy whatsoever. I don't really have a ton of interest in home builders, right? You can see I'm just crossing off the red ones. So where do I still have interest? Well, what's funny about this market is when it gets into this mode, you can see that the two sectors that are green here are staples and utilities, right? They both have a 70 out of 100 score, which is usually pretty good. But in this market, those sectors are not going to work as well, right? Because if the market continues to just want, to push tech up 3, 4, 5% a day on these like giants, like Meta's up 5% today. Meta, that's no small feat. That's a lot of market cap. Microsoft's up 10% in 2 days, maybe 11. Again, no small feat. Tesla up 5% as well. So if the market's oriented in that direction, basically if there are an abundance of animal spirits in the market, which would be evident by chasing tech irrespective of price, then the two green sectors here that we've highlighted actually don't work as well, right? You're going to lag the market here. So I tell you that just as a caveat because these are the only two that are green, but they may not be in play as much in a tech-driven market. So what is in play? Well, XLF is in play with a 24. Basically, I'm looking for things that have a higher score than a negative 17. So SPY has a negative 17, which is just neutral. This is a 100-point scale. And so XLC certainly fits the bill. So that's Meta and Google and Netflix, although Netflix has certainly had a run. XLI is starting to fit the bill here, but I'm less interested in that one. XLK is worse than SPY at the moment, so I would cross that one off. SMH, again, these are very likely to change next week, but as it sits, I'm just going to cross it off. And so that leaves me with two places that I think are better than SPY that are in play, and that's going to be XLC and XLF, so communications and financials. In the event that the market chills out just a little bit and maybe tech is only up 1% instead of 5% on some of these mega caps, then these two sectors should come back to life, which is going to be the staples as well as the utilities. But for now, if the modality is going to be one of just screaming to buy tech, then you'll probably will do best in things inside of XLC and maybe some things selectively inside of XLK. All right, guys. Well, that is my time. So just to recap what we did here, we started with the indexes. We did the SPY, and then we did the QQQ. We spent a little bit more time on SPY just as a representative basket of everything. And SPY and QQQ gave us basically the same picture, which is a market that is now trading above its weekly 21 at this moment in time. Surely that won't change by the close, but it is trading above its weekly 21. That is a huge benchmark. You have now the QQQ trading at its daily 200, and if the Qs are leading the way, which they are, then that implies that the SPX wants to get to its daily 200, which is right around 57.50. So that would be in play for next week. I believe next week is also Powell. Feel free to correct me in the comments if I'm wrong on that, but I think next week is Powell. And we'll see from there what the next card brings. But for now, this week has been incredibly impressive, not just from the outside in, because you do have a very impressive weekly candle, but mostly, at least for me, from the inside out. The dynamics that I've seen this week on the 5-minute charts on the indexes, especially the QQQ at the SPY, remarkable stuff. Right, you don't really want to mess with that until you get some really, really clear signals that something has changed. So that might require being a little bit late to the party in the event that we do get some type of reversal. But in the absence of that, stick with the status quo, and the status quo is up until 57.50 SPX, and then we go from there. All right, guys, that's my time. See you next Friday. Cheers.